Coming up on Market to Market, Congress gets their budget homework from the White House. The fighters of colony collapse disorder get new weapons.
If you have to.
And commodity market analysis with John Roach. Next.
It's really quite unusual.
Pioneer Hybrid International is a proud sponsor of Market to Market.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at AccuSteel.com.
This is the Friday, February 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. According to the Treasury Department, the U.S. budget deficit is up 19% from the same period a year ago. The growth puts the country on track for its first $1 trillion deficit since 2012. The nonpartisan Congressional Budget Office says it will stay above that line for the next decade. President Trump is offering his solution to the growing deficit with his fiscal year 2021 budget. His projections show the deficit would indeed top $1 trillion, but then decline over the next decade. Peter Tubbs has more.
The White House's $4.8 trillion federal budget arrived in Congress this week. Outlined in the document were the president's priorities, featuring cuts to various domestic programs, including Medicare and Social Security, with the aim of balancing the budget in 15 years. The fiscal year 2021 budget reduces $57.7 billion in mandatory agricultural spending by 2030 through lower crop insurance subsidies and conservation programs, in addition to tightening eligibility for farm programs. At the same time, the proposal would increase money for rural infrastructure, rural water and wastewater projects, and a rural broadband pilot project. Critics contend many missives are repeat line items that failed to win approval when Republicans controlled both chambers and are likely DOA in a House controlled by Democrats. In 2019, the Trump administration provided $28 billion in trade mitigation assistance and $5.7 billion in disaster help for farmers. If the new budget is approved, roughly 1/3 of farm income will come from government payments and crop insurance benefits this year. There is new language for the Supplemental Nutrition Assistance Program, or SNAP. Included in the document are reforms to work requirements for able-bodied adults in an effort to promote self-sufficiency. Under the Trump proposal, adults would be required to work, participate in job training, or volunteer at least 20 hours a week in order to receive SNAP benefits. This budget repeats a request to combine traditional SNAP electronic benefits transfer cards to allow for the purchase of harvest boxes filled with products made in the United States. The administration is also looking to reduce duplicate participation in all federal programs through the implementation of the National Accuracy Clearinghouse, an interstate data matching system. 9 members of Congress sent a letter to the president about the challenges of the $15 billion in SNAP cuts that benefit almost 36 million Americans. Each of the signees, all Democrats, said that they, at one time in their lives, participated in government programs for assistance. The letter states that every dollar of SNAP funding increases the GDP by $1.73. The Trump budget is built on the assumption of 3% GDP growth over the next 5 years. U.S. GDP growth has been below 3% since 2005. For Market to Market, I'm Peter Tubbs.
The good news of paying a little less for a gallon of gas last month was enough to keep some of us from worrying too much about higher prices everywhere else. The Labor Department reported the Consumer Price Index bumped up 0.1% in January. When the ups and downs, the food and energy prices are pulled out, core CPI moved 0.2% higher. The unseasonably warmer weather may have made for a few more purchases as retail sales climbed 0.3%. Even when higher auto sales are cut out, the index rose 0.3%. USDA lists honeybees as a critical link in U.S. agricultural production. According to their calculation, the billions of workers that take flight every day add an estimated $15 billion to the value of U.S. agriculture. Their workday is not an easy one. Among the many obstacles these tiny pollinators have faced is colony collapse disorder. A great deal of brain power has been devoted to fighting the causes of CCD. Those attacking the problem have come up with some new weapons. Josh Bittner has more in our cover story.
For more than a decade, colony collapse disorder has captured headlines. The syndrome causes adult worker bees to abandon the hive, leaving the queen and her immature brood to fend for themselves.
She's laying good eggs and she is keeping the hive population up. A good queen, yeah.
Due to the crucial relationship between pollinators and flowering plants, the United Nations warned the mysterious phenomenon could be capable of slashing worldwide crop output by 1/3.
It is a concern. Every year there's stories of beekeepers who lose 50, 70, 80% of their hives. And it's hit us in the past. We're doing our best to prevent that from happening. All they can say for sure is that it's a multifaceted problem.
Tim Hyatt and his brother Steve are second-generation beekeepers in Washington state.
Was one link in the chain of providing food.
The brothers say sporadic losses have plagued apiarists since well before European settlers introduced the honeybee to North America. The U.S. Environmental Protection Agency reports that new cases of colony collapse have declined substantially in recent years. But those closer to the hive point to a dizzying array of more than 60 underlying stressors, including pesticides, disease pathogens, and environmental factors.
The Varroa mite has been described by many people as probably the #1 threat to honeybees. So it has like these almost like hook-like mouth seam ripper type appendages, and what they use that to do is to basically rip a hole in the exoskeleton of the honeybee.
Dr. Jennifer Hahn is a postdoctoral pathology research associate with Washington State University. She says invasive symbiotes, like the Varroa mite, attract several other diseases, including deformed wing and Lake Sinai virus. According to Hahn, these microscopic insects eventually conquer honeybee immune systems that have been compromised by neonicotinoid or nicotine-based insecticides.
Imagine having a parasite living on you that's about the size of a dinner plate, that's feeding on you at all times.
Decreased flying time and the inability to pollinate are among the negative results from this relationship.
Bees, just like any other animals, can get viruses, and we do not have any good treatments, much like we do not have a good treatment for the common cold.
Washington State University is employing a multi-pronged approach to boost pollinator populations. Dr. Nick Nager is an entomologist specializing in honeybee analysis whose work grew out of a Department of Defense initiative involving fungi. Post 9/11, Congress passed the Project BioShield Act, which allocated $5 billion towards stockpiling vaccines in the event of a bioterrorist attack. Government research led to work done by mycologist Paul Stamets. His company, Fungi Perfecti, in southern Puget Sound on the opposite side of Washington, are purveyors and promoters of what they call high-quality gourmet and immune-supportive mushrooms. Through the course of submitting certain fungal strain samples to DoD, Stamets, USDA, and Washington State University put their heads together, and an ancillary partnership with higher education blossomed.
Over 10 years ago, Paul Stamets was growing mushrooms and noticed that honeybees would forage in his mushroom beds. Bees normally live in hollowed out logs where they would encounter fungi on a daily basis. Now they live in these very nice sawn wood hives that have less fungus in them. And so we think that by allowing bees to eat fungal and fungal products again, that this could help restore some of their health.
Dr. Nager says his research shows when bees drink liquids extracted from certain mushrooms, it cuts their viral levels 1,000-fold. These long-lived polypore mycelium samples are supplied by Fungi Perfecti.
Those fungi tend to produce a whole range of antimicrobial compounds.
Dr. Hahn, in turn, utilizes a related component common in most soils.
What I've done is looked at a fungus called Metarhizium that can infect and kill insects. Eventually, the final project we want to be something probably like a strip that beekeepers can just insert into the hive. So the way this works is that the spores of this fungus land on the skin of the varroa mite, and that spore will germinate, burrow its way inside the varroa mite, and proliferate inside and kill the bug from the inside out. It's gruesome and fascinating all at the same time.
The natural pesticide's potential is good news for the region's non-citrus tree fruit producers. Aaron Riggs manages a 69-acre apple orchard on the Columbia Plateau, an area known for its favorable weather and soils.
You couldn't set enough fruit if you didn't have the bees. And the bees are the main source of pollination on the fruit. You would get some pollination through other insects or things like that, but you wouldn't get near the crop to make it effective farming, to make it profitable, if you didn't have the bees.
Hundreds of Hyatt honey hives crisscross the U.S. every year on truck beds to pollinate tree fruit and nuts in California and the Pacific Northwest, before rounding out the summer with honey production in North Dakota.
We have to wait for the sun to go down because the bees will be flying all around the orchard. And then when it's dark like this, the bees will all be home. We'll gather them up and take them to a different location.
USDA values national honey production at $320 million per year, but the evergreen state alone accounted for over 8 of the 11 billion pound domestic apple crop in 2018. And while they proclaim apples a $2.5 billion industry there, Washington State University also has earned respect for throwing down the gauntlet in the fight against colony collapse and its root causes.
They're doing a lot of work to try to improve bee health, and we're really appreciative of their efforts.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The coronavirus, weather, and traders waiting on Chinese buying had a mixed effect on the market. For the week, March wheat plummeted 16 cents and the nearby corn contract lost 6 cents. Despite worries over the above-mentioned factors and predictions of large South American crops, the March soybean contract gained 12 cents. March meal added $1.80 per ton. May cotton rose 27 cents per hundredweight. Over in the dairy parlor, March Class 3 milk futures lost 37 cents. The livestock sector was mixed. April cattle put on 53 cents. March feeders added $3.53, and the April lean hog contract shed $1.95. In the currency markets, the U.S. dollar index rose 43 ticks. March crude gained $1.70 per barrel. COMEX gold added $10.60 per ounce. And the Goldman Sachs Commodity Index grew almost 9 points to finish at 396.80. Joining us now to offer insight on these and other trends is our senior market analyst, John Roach. Hello, John.
Thanks, Paul. How are you?
Welcome to the Midwest. No polar vortex this year like last year when we bring you up in January. We just liked a good day of single-digit weather just to remind you of your geography now.
It was crisp out yesterday morning.
We'll get to what you talked about in some of your meetings. I want to discuss that in Market Plus, but I want to start tonight with wheat. This is a market that we watched a lot of 2020 heading up, but now here in the last little bit, we've seen it going down. What's happening?
The wheat market had a lot of support from the spec funds that carried prices higher until it quit. And even though they've mostly held on to their net long positions until just this last week, where they started to liquidate a little bit. We pushed the wheat market up and checked. One of the boxes that we pay attention to is when the spec funds get over a normal net long position. When they get over 75% of their normal peak net long position. It's like getting everybody on the same side of the boat, and it gets dangerous and it gets wobbly up in there, and that's what we started to wobble. And we broke down the green line and the 20-day moving average that we look at and turned it into a downtrend and ran right into spec fund selling as a consequence.
Have enough people jumped off of one side of the boat, or are they going to continue?
The spec funds continue to hold a larger than normal net long position. They continue to trigger that box. However, they could hold them. I mean, there's no, they don't have to sell out. They're certainly welcome. They certainly may. Their programs may have them holding these positions. But typically, if the market moves into a downtrend and that downtrend can persist for a little bit, they become even more aggressive sellers. And I think we saw some of that this week. And unless something stops this downtrend, we can see more of it next week.
If I'm sitting with some grain to sell, is it time to sell?
Well, I think if you're holding too much wheat, and we're just talking about Chicago wheat, soft red winter wheat, and to a degree the other wheats as well. If you're holding on to too much, if you're holding on to more than what you really normally would have, then I think that you have to get yourself a more comfortable position. Get some puts underneath it or something. We're already well off of the highs. I'm not a real anxious seller here, but I'm worried about further liquidation and I'm worried about further pressure.
All right. We get questions via Facebook and Twitter and Instagram each and every week, and this week we got one from our friend Phil in Ontario, Canada, and he was asking, he was saying USDA report said corn exports down, however the U.S. corn being exported via rail to Quebec because the corn is so much cheaper there. But his question is, with more 2020 U.S. corn acres expected, how low could corn prices go in 2020?
Well, I mean, the market could certainly come down to last year's level if everything runs just excellent through the year and our demand continues puny. But I think we've been looking at the worst of the arguments here from a demand standpoint. I think demand will be more brisk as we move through the rest of the winter months into the spring. Brazil really doesn't have any corn to sell until their crop becomes ready, and they're just now planting it. This week we saw the Chinese actually step in and buy some corn, but they bought Ukrainian corn instead of U.S. corn. So they're back at least buying a little bit. So what I'm really suggesting to people is we have a normal kind of a year here. We're coming into the growing season. We've got to raise good crops, and there's no guarantees that we're going to raise a big crop in this country or in Brazil. We have both of those crops really at risk right now. And so our suggestion is be patient here on selling corn. We don't like selling a lot in February anyway. We think we'll get sell signals. Normally you get better prices in March and April and May. We have smaller carryouts forecast this fall than last fall. So it's a lot of fear and a lot of possible if everything's big on the production side.
Okay, there's the if and the fear and the possible side of understanding China's buying and what that's going to mean to the U.S. producer of corn. Traditionally not a big buyer of U.S. corn, but we think they're going to buy. We hear in an agreement they're going to buy. Today's day one of implementation of phase one. What's the shoe going to drop when it comes to China and their buying and helping crystallize our grain picture when it comes to corn?
Well, we have a curveball that's been thrown at us called the coronavirus. And so we can't look at normal and look at past and try to project out in the future because we haven't seen anything quite like this before. And it's not winding down quite the way it looked like it might be. And some of the numbers that have come out in recent days, it's getting more scary perhaps, but it's not having a huge impact on the market. It's a small impact actually that we're seeing from the coronavirus. So the market, the big overall market is saying don't worry so much about that. Now that may change because none of us really know, but at the moment equities are telling you that it's going to be a temporary situation as well as our grain markets. And so I think that as we look out forward, assuming that's the case, we expect Chinese business to be picking up because they've already sold a lot of their inventories, their stockpiled inventories, if you will, or their surpluses, and now they're down to where they're needing to buy some inventory in order to cover against one of their shortfalls.
You mentioned coronavirus. They did a calculating of how severe it is. 1,380 dead in China. But just for perspective, we've had 14,000 deaths from the influenza in the United States this year. So, I mean, this is still not a major problem. Is that what the market's telling us when they're saying this corona, not saying discount it, but not give it as much traction as maybe it gets talked about or written about?
I think that's exactly right. Normally, the market is able to figure out how good or how bad something is. Now, maybe this is a different time, and maybe the market's giving us some bad signals. I mean, I don't know, but when I look at the marketplace, you just read the results of the commodity indexes were up this week, equities are up this week. So the marketplace is telling you the world is okay. Now, we may learn something different later, but at the moment, the world is okay. And if you're marketing grain, market grain with the idea the world's okay.
All right, everything's going to be all right. You're talking us off the ledge.
It's okay. It's okay.
All right. Today, USDA put out some numbers that were old numbers that appeared to be new numbers. The thing that stuck out for me, and I know you're going to tell me there was other things I should have been paying attention to. Projections on USDA corn acres, 94.5 million. For beans, though, 84 million acres, and a trend line of 50.5. From an acre standpoint, let's talk about that first when it reflects to soybeans. Any surprise that that's not a change from November yet?
People's attitude, as I've talked to several groups of farmers, 3 groups of farmers this week in northwestern Iowa, and I asked for a show of hands how many people think the corn acres will increase versus bean on their farm. And we saw almost across all the meetings, more hands coming up with increased corn acres and none on increased bean acres, or just maybe a hand or two. So at the moment, the way relationships are, farmers are going to plant more corn.
All right, but there's also another factor. We talk about China with corn. China's involved in the soybean discussion, but there's also a third party, and that's Brazil, and it has something to do with currency.
It has a lot to do with currency, and one of the things that I would suggest for those of you who are looking at prices and the bean, the decline, the market's decline, and so forth, look at what currencies have done. Since January 1, the Brazilian real has dropped 8%. And if you look at an $8 or $9.60 bean on January 1, that's a little over 75 cents a bushel of decline due to currency realignment. During that same period of time, the farmers in Brazil, afraid of what kind of deal we might strike with China and how much business they may lose, have been much more aggressive selling. Really, for a period of several months, they've been more aggressive selling than what they normally are for fear they were going to lose the business. And so there's more going on here with the currency, and that's having more impact on your beans than the coronavirus.
All right, I have to move on. We'll discuss a little more currency and Market Plus. The cattle market, we talked about tariffs. There's a tariff that came off today on the cattle market. Is that impacting the price moving forward here as we see it did kind of tick up this week?
We saw the cattle market get slammed first before the tick up, and the slam was a heavy liquidation of speculative longs and the disappointment that there was no business after phase 1 was signed. This week that turned. We had solid buy signals on fat cattle and on feeder cattle, and we had a nice recovery here today. The market turned the corner. We think the market can move a little bit higher in here. We've got some front-end numbers to deal with. We're a little worried, but at the end of the week, and part of it was because of cold weather, we saw the bids come back a couple dollars after being down a couple dollars at the middle of the week. So the market maybe is starting to feel a little better about the demand side.
I left my price sheet in the control room. I can't even look up the number to help you out. However, speaking of moving up a couple of dollars up and down, hog market has just been very hard to maintain. What's going on there?
It's just been down, down, down. I mean, there hasn't been that much back and forth. It's just mainly been down. We were all ready for the Chinese business. When we've increased the breeding herd, we've held market hogs back. And so when you look at the charts, you can see we've just got big numbers of hogs now and coming at us. And the Chinese aren't buying in the kind of volume we thought they were going to buy. And so we're pushing bigger supplies through a system than what the demand really what we thought it was going to be. It's a smaller demand than we thought.
And China is pulling from their own reserves again to feed their people as opposed to bringing some of our... At some point, they're going to have to fill those reserves back up, right?
Well, you'd expect that, and you'd also expect them to start to import more because that's a substantial reduction in protein production in China, and they need to import protein to cover it.
The stories of we just didn't see a bounce back when it came after the Lunar New Year. We thought we'd see some buying, but we still haven't seen that.
The headlines all shifted from what they were to coronavirus. And that has that headline risk in the market. That's a black swan event in a market, if you will. who expected something like that? And what's amazing about it is it came at absolutely the worst time when they put so many of their people together.
It is a tough thing, and unfortunately at hard times I have to interrupt and say thank you, John.
Thank you very much, Paul.
We'll talk to you in Market Plus in a moment. That will wrap up the broadcast portion of Market to Market, but we will keep this discussion going in Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. You know, using Twitter allows you to stay in the loop with just a few characters. We share news, pictures, and behind-the-scenes information on our feed at Market to Market. Join us next week when we'll look at how one business is helping landowners put some of their ground back into prairie. So until then, thanks for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.